What's going on, everybody? Nick Deckard here with your November market update for Ocean City, New Jersey. So let's dive right in and skip all the fluff and let's get you what you came for. November is usually a changing point, not only for the seasons, but a lot of folks take their eye off the ball. Holidays come around and they really turn their focus inward to their family, to enjoying things through the end of the fall into the early winter before revisiting things again in the spring. Now, this year is showing to be a little bit different. So from a mortgage front standpoint, let's talk about where we are. We're still floating just a little bit above 3% for the most part. Depending on your credit, you might be able to squeeze below 3, but the picture there doesn't look friendly. We'll get into that at the end. Now, the inventory component. So normally what we see is a pickup in the early fall, and then it'll start to take a dive back downwards into the late fall, early winter. That's exactly what we're seeing. So we have been at about 300 properties on the open market for the better part of the summer and the fall, but we are down around 273 as of the time that I pulled the data for this recording. And I expect to see it float around that number for the next few months before hopefully coming back up a smidge in the spring. So all that means is that supply is even more constrained, right? Demand has dipped down a bit as people have focused on other things, but homes are still moving incredibly quickly, especially the good ones. And that is reflected in the days on market, right? That's still dropping. And personally, I thought that that would flatten out a little bit, but that isn't the case. And of course, prices, they are still going upwards. And now, if you've been watching these, we had seen the single family prices flatline a little bit and just really incrementally inch upward. So far, halfway through the month, we've taken a pretty big jump, but there's only been 5 closed single family sales so far. It's an extremely small sample size. So we'll have to stay tuned until the end of the month. I will obviously keep tracking this. And it's going to be important to see if that is really a point that will stick or if it will come back down and will continue that slightly flattened out trend as we move forward. So let's move my face out of the way so you can see what the heck this graph is showing. So of course, we're going to go right back into the charts with this one. Pending sales, they're looking very, very low for where we are. But of course, we're halfway through the month. And I wanted to point something else out that screwed me up a little bit. Number one, obviously, it sounds like I'm holding my nose, fighting the sniffles, but I didn't want that to stop me from putting this out for you guys. We're actually exactly halfway of where we were in November 2019. It's an optical illusion because of how I have the chart incremented on the left-hand side. It doesn't start at 0. So we're about where we should be if we are staying in line with pre-COVID levels, which of course we've been roughly there over the last few months. So I would expect that that's going to be the case moving forward. And again, what does that mean? That means that we have achieved roughly a new market equilibrium. That does not mean that it's a balanced buyers and sellers neutral market. Not talking about that, not talking about inventory, talking about demand, number of sales, and number of transactions. We seem to have flattened out, which means the buying public, by and large, has accepted the increasing prices, which means they're likely to stay, barring some external factors changing things. And closed sales, this will just go to reinforce exactly what I'm talking about. So where we were in November of 19, where we are expected to be by the time the month closes out, this blue bar, it's everything that should close that has a November close date, both single families and condos, just hasn't closed yet. We should be almost identical, maybe even a smidge above where we were last year. Now, again, looking back at 2019, we would expect to see things falling off as fewer homes go under contract into the off season. And if we go back real quick, again, if we are going to stay in line with where we were in November, we would expect moving forward for everything to continue to follow roughly with that trend where we are back to normal. So from a single family home standpoint, again, here's this big jump I was talking about. Things were roughly flat for looks like almost 6 months, picking up, 1 to 2 percentage points at a time, which all things considered, what we were seeing previously, that's roughly flat. Now we've taken a good bit up based on those 5 sales, and days on market, again, are continuing to slowly drive down the roller coaster, right? There's not going to be a steep drop. There's not going to be a huge incline. We're going to presumably find a new equilibrium here under 40 days. And as for condos and townhomes, my favorite. So it's still ratcheting up at roughly 2% per month. And that's been consistent. So as long as the demand continues to rise to meet the occasion, and to be totally frank with you, I keep track of everything that goes under contract as well. And while I don't always see the price or know the price until it closes, there are homes consistently being put up on the market where I see the initial asking price, and to myself, based on comps, based on everything, I think that's a little too high. We're not talking 50K over, but it's a little higher than I think it should be. And it still goes under contract within a few weeks. So the demand is rising to meet the growing prices, even as we go into the slow season. And of course, with the days on market here, we did have that steep drop, but we are starting to flatten out a little bit and still inching downwards sub 40 days. Now, all of that said, what does that mean? Where are we going? What should you do? So mortgage rates. I just spoke with somebody who I'll say has an in, and this is one opinion. Don't take this as law or anything, but a large bank is expecting over the next year or so for rates to increase more than 1 percentage point. And that is in line with what I've seen elsewhere, with really the first big hit likely coming toward the end of this year, possibly in Q1. It all depends on what the Fed is going to do with their monetary policy, right? And I don't want to go too deep down this rabbit hole and lose you, but inflation is out of control. You see it at the gas pumps, you see it at the grocery store, you see it anywhere you look. And really the only lever that the federal government has to pull is to deal with their monetary policy and stop printing money, so to speak. So if and when they do that, there's going to be a painful, probably few months before things really settle back down. And I do expect that higher interest rates are going to be one of those painful results of them doing that. So my expectation is we're going to float towards 3.5% by the end of Q1. Now, in terms of inventory, again, there's still homes coming on almost every day, but they're going very quickly for the most part. And sellers are adjusting. And I think it's a little bit humorous in a more neutral market. You might see a price change within a few weeks, right? 2, 3, maybe 4 weeks would be the first one you would see a price change. Everybody is reacting very, very quickly. So if a seller puts something out there at a number that, they felt was right, and they don't get the traction that they want, they will see a pretty quick price reduction on those properties. And I have again been asked, doesn't that mean that things are coming back down? No, that just means that people are continuing to take their what I call moonshots, and they're realizing pretty quickly that going fishing and hoping for that one person who may be willing to make a kind of silly decision probably isn't the right way to go. And playing and sticking within the growth of the market is going to get you the results that you want. So inventory is still very, very low. It has gone down, and I do expect that to stay the same through the winter before, again, really in February, maybe March, we should see an uptick, hopefully back up above 300 homes. But again, in the grand scheme of things, even that is still extraordinarily low. So what will that mean for prices? So prices are still all creeping up across the board. And as long as that doesn't change, as long as there's not some mass agreement between all buyers out there in the world that they're going to sit back until things come down, that's going to continue, right? Sellers will only do what the market dictates. Buyers will also do what the market dictates that they do. And for a lot of people, and this is one of the funniest reasons that I know I hear on a pretty frequent basis from both sides, from sellers and buyers, well, I don't really have to sell. Well, I don't really have to buy. Well, that's completely true, right? Ocean City, for by and large, is a secondary home market. This is not a need-based decision. This is very much a want-based decision. So nobody really needs to do anything for the most part, besides the few that do. So as long as that stays the case, which I expect it to, people are only going to sell when they get a price that works for them. And that has so far meant that prices will continue to inch upwards. And before my dogs start singing in the background, I'm going to wrap up days on market. Again, I think we'll inch down a few more days here and there, but I don't expect that we crash below 30 anytime soon. And all said, I mean, the market still is what we think it is, right? And November, I was looking forward to, and I will say this definitively when November wraps up. I was looking forward to seeing if there was going to be some noticeable pullback from the buyer community. And I simply haven't seen that, right? Again, in volume, it tracks with where we were pre-COVID. Prices, they're still going under contract at ever slightly increasing amounts. So I think this is our market for the foreseeable future. So that said, only you know what's right for you, right? And for most of you watching, this is a want-based decision. So it's going to come down to, for you, how badly do you want to own a home here, right? This is not the strict financial decision and, the great investment that it would have been a few years ago, but this is not a financial only decision. Obviously, that's a constraining factor for you, but Ocean City is what it is, and it's not going to get any less desirable for folks to be here. And if you're comfortable waiting for the hopeful, some number of years out, if when maybe crash, more power to you. But I know that there have been folks who have been waiting that for that for quite some time, and it has not yet come. So all that said, if you have any questions, obviously you can reach out to me anyway here, or if you have any questions, just drop them below in the comments and I will get to them ASAP. And as always, I appreciate you taking time to look at this. I hope you found it helpful. If you have any feedback, I am all ears, but otherwise, I'll see you on the next video.